Okay, I want to look at this Matthew Perry video real quick here. Now, I watched the first 4 minutes of it or so, and it's all the same typical stuff, right? It's he believes in AMC, he's still holding his shares, blah 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 blah. Look at the chart, blah 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 blah. Look at Ortex, blah blah blah. And then he goes into this little spiel. So I want to listen to this here because I've been looking for an opportunity to talk about this particular topic. And as luck would have it, Matthew Perry has given me the perfect opportunity to do so.
So if we look at the chart exchange data, again, we pretty much are picking up exactly where we left off. 64%, almost 65, 64.9% short today. Well, not today, but yesterday, right? Total, if you're looking at average for the last 30 days, average for the last 30 days is 59.42%. They are shorting this on average 60%. This is what's crazy. This is what doesn't line up and why it's such a strong position, no matter if the whole entire market is falling or just AMC is falling.
So that's not true. I'm going to let him continue for a little bit, see where this goes, because I haven't watched it beyond this. And then finally, we're going to go back and talk about short volume and why he's wrong.
It's ridiculous to see how much they're shorting this thing. And, we're sitting here just like, does anybody else see this? Do you see this? Because I see it, and it's ridiculous, right? So looking at that just makes me think that this is going to continue to be, yes, it could continue to drop down, but it's just going to continue to get stronger and stronger as they continue to drop it down. So Ortex data and chart exchange data shows me something positive for us, at least.
Okay, so let's come over to this document here. This is on FINRA. Okay, this is Information Notice 51019 from May 10th, 2019, and it is Understanding Short Sale Volume Data on FINRA's website. And that's where Chart Exchange gets their data from FINRA and from the exchanges. So that's what this is talking about. This notice provides information to assist market participants in understanding the short sale volume data published on FINRA's website. FINRA is aware that some market participants, including investors, may occasionally perceive the percentage of short sale volume to be unusually high or inconsistent with the reported short interest data. This perception may cause market participants to draw inaccurate conclusions about the level or nature of short selling activity in the relevant security. FINRA is issuing this notice to further explain the published short sale volume data and provide several key points for market participants to consider when evaluating the data. In other words, they're putting out this notice because people are misinterpreting short sale volume to mean something other than what it means. So the background: on September 30th, 2009, FINRA began publishing the monthly short sale transaction file, which includes transaction time, price, number of shares for every off-exchange short sale transaction in an exchange listed or listed stock, the monthly file. On November 9th, 2009, FINRA began publishing the daily short sale volume file, which provides aggregate daily short sale volume data by security for off-exchange trades in listed stocks, as well as for trades in non-exchange listed or OTC equity securities, the daily file. The monthly file and the daily file are collectively referred to herein as the short sale files. FINRA derives the short sale files from transactions that are reported to its equity trade reporting facilities. FINRA publishes separate short sale files on its website for each trade reporting facility. The exchanges publish their short sale volume data in the same format relating to trades executed on their markets. FINRA announced the publication of short sale volume data by FINRA and the exchanges in Information Notice 92909. At the time, SEC staff, FINRA, and the exchanges collectively decided on how to calculate the short sale volume data to ensure consistency in the published data. One of the key decisions was to publish only trades that are publicly disseminated, for example, via the consolidated tape. FINRA believes the following three key points about the short sale volume data may help market participants better understand and draw informed conclusions about the data. As discussed below, the data: 1. Does not include any trades that are not publicly disseminated. 2. Is not consolidated with exchange data. And 3. Does not and is not intended to equate to short interest position information. Okay, so those are the three key points. And we're going to go through these one by one. First, as noted above, the data in the short sale files only includes trades that are publicly disseminated and excludes trades that are not publicly disseminated. As a result, some offsetting buying activity related to the reported short selling would not be reflected in the daily file and may result in the appearance of a higher concentration of short sale to total volume. A common example is where a firm is facilitating a customer order to sell long. The firm may elect to first sell an equivalent number of shares from its own trading account to another firm and then purchase the shares from the customer at the same price to fill the outstanding long sale order. Trading in this manner reduces risk for the firm by enabling it to manage its inventory and lock in a price for the customer execution. Although this trading model involves two separate trades, one between the two firms and one between the firm and its customer, the two offsetting trades are executed at the same price to fill a single customer order. Thus, FINRA rules provide for the public dissemination of only one of the trades, the trade between the two firms, so as not to overstate the reported volume. If the firm facilitating the customer long sale order has either no position or a short position in the security in its trading account, the trade with the other firm is reported as short and included in the short sale volume calculations in the daily file. The volume associated with the firm's purchase from its customer, however, is not reflected in the daily file. Thus, the firm's short sale is included in the short sale volume calculations without any indication that is associated with an offsetting purchase to facilitate a customer long sale. The second point, the data is not consolidated. I'm going to skip through that and go to the third point here. Finally, short sale volume data does not and is not intended to equate to bi-monthly short interest information. FINRA rules require firms to report on a per security basis the total quantity of shares held as short positions in all customer and proprietary firms' accounts twice a month. FINRA publishes the short interest data for OTC equity securities on its website, while the data for listed stocks is published by the exchange on which the stock is listed. Although some websites redistribute the daily file and refer to the data as short interest, it is not, in fact, the equivalent of reported short interest information. Some market participants mistakenly conclude that the bi-monthly short interest data is understated because the daily file reflects short sale volume that is much larger than what is reported as short interest. However, short interest data reflects short positions held by market participants at a specific moment in time on 2 discrete days each month, while the daily file reflects the aggregate volume of trades executed as short sales on each trade date. Therefore, while the two data sets are related, i.e., short sale volume may ultimately result in a reportable short interest position, they are not necessarily correlated. For example, if a firm sells short 1,000 shares of security ABCD and then purchases 1,000 shares of ABCD later the same day, the short sale volume in the daily file will include the 1,000 shares that were sold short. Because the firm sold short and purchased an equivalent number of shares that day, it did not establish or accumulate a short position in ABCD. Thus, its short sale has no impact on the reported short interest in ABCD. So this next resource is from SqueezeMetrics, and I'm going to jump right in here. Why short is long? A short sale is the sale of a security that the seller does not own. Traditionally, short sales are associated with speculation, traders betting that a stock will go down. But according to the SEC, trades marked with the seller short comprise about 49% of equity share volume. In other words, about half of all selling volume in the market is short selling. Unless we actually believe that half of market volume is speculative short selling, this demands an explanation. To understand, you need to know how market makers do business. Traditionally, market makers make their money by quoting a spread. This means placing a bid at, say, $19.95 and an offer or ask at $20. Since the market makers have no position in the stock, the offer at $20 is necessarily entered as a short sale. They don't own it, so they can't actually sell it. And the footnote here says this is why market makers are exempt from short selling restrictions. We've explained that here before, but here it is in black and white. Now imagine the common scenario where one investor sells to the market maker at $19.95 and another buys from the market maker at $20. Knowing that market makers place short sales at the offer, we know that only one of these trades will be reported as short, the one where investor is buying the stock at $20. So over here, we talked about a customer long sell. Now we're talking about the investor is buying, okay? So the market maker is selling and the sale is reported as short. However, it ultimately ends up as a long position for the investor, okay? So this means that whenever a market maker fills an investor's buy order, the market maker is facilitating the trade by shorting shares. Thus, short volume is actually representative of investor buying volume, and non-short volume is representative of investor selling volume. It's no coincidence that short volume is predictably half of total volume. Short sales represent the buying half of the market, and long non-short sales represent the selling half. And then it goes on to talk about how speculative short selling is really a relatively small amount of volume, and yada yada yada. It goes into great detail about this. I got links to all these things in the description for this video, and it has data that back all this stuff up. So getting back to Matthew Perry's video. So when he talks about the Ortex short interest data and then moves along to the short volume data, it really reflects a misunderstanding of what's happening. So this is not 60% speculative short selling. It's not 60% naked short selling by hedge funds. It actually is market makers selling shares to retail investors, resulting in long positions. And indeed, if we look at orders by Fidelity customers, we can see here, just on this one brokerage, for example, 4,200 buy orders versus 1,600 sell orders. Now, I realize this is one brokerage that may or may not be executing their trades on exchange, off exchange, or whatever, but in either case, there is a market maker on the other side, whether it's on the exchange or off exchange, and this is showing a disproportionate number of buy orders. So in other words, this supports the conclusion that a lot of this short volume, most of this short volume that we see reported on a daily basis on resources like Chart Exchange or StockGrid or whichever one, shortvolume.com, a lot of this 60%, roughly 64% of short volume that's reported is actually retail buying, not speculative short selling, not hedge funds and institutions, quote unquote, shorting the stock down. Okay, so this is very important, and it speaks to one of the central tenets of this ape narrative for AMC stock. And to me, this should introduce significant doubt into the veracity of the claims by these influencers like Matthew Perry, Short the VIX, Trey's Trades, Matt Kors, etc., because they are completely not understanding what is happening here. So now we know that most of the short sale volume data that's published is not speculative short selling by institutions and hedge funds and firms. Rather, it is market makers facilitating long buys and sells for retail investors, especially the off-exchange volume that gets so much attention by the apes and by the ape influencers. If you take the time to look into these details and educate yourself about the market structure, it's more complicated than the ape influencers are representing. And I've tried to provide concrete resources to back up the claims, the fact checking that I do. So again, these articles are in the description. Let's close it out by going back to Matthew Perry and listening to him misrepresent short volume data one last time. And thanks for watching. Check out my Telegram finance chat if you'd like to chat with me. Catch you on the next video or the next live stream. Have a good night.
All about. So if we look at the chart exchange data, again, we pretty much are picking up exactly where we left off. 64%, almost 65, 64.9% short today. Well, not today, but yesterday, right? Total, if you're looking at average for the last 30 days, average for the last 30 days is 59.42%. They are shorting this on average 60%. This is what's crazy. This is what doesn't line up and why it's such a strong position, no matter if the whole entire market is falling or just AMC is falling. It's ridiculous to see how much they're shorting this thing. And, we're sitting here just like, does anybody else see this? Do you see this? Because I see it, and it's ridiculous, right? So looking at that just makes me think that this is going to continue to be, yes, it could continue to drop down, but it's just going to continue to get stronger and stronger as they continue to drop it down. So Ortex data and chart exchange data shows me something positive for us, at least.